Hello, I'm the Tax Incentives Coordinator for HPD. I'd like to introduce you today to some programs that might help you financially should you own a historic property and want to rehabilitate it. Many of you know rehabilitation is a certain form of madness, an obsession, and many ask, why should you save a rundown old building? It may very well cost you more to rehabilitate. Why not just tear it down and start over with something new? Wouldn't that be the sane thing to do? Besides all those commissions and reviews you have to go through. This top house on the right, look closely. This was a successfully rehabilitated house. The house has been saved to stockpile some news stories for the next generation. It was expensive to rehab and probably more than if the owners had just torn it down. But they took on the project and also took on the process of applying for tax incentives. What could be possible for these owners? Tax incentives offer a financial benefit for property owners who take on the madness of historic rehabilitation. These incentives do not give you grants or money to do the work, but they give you tax breaks after you finish the work that may help soothe the pain of saving that old building and not tearing it down. So there are 3 programs, the 2 federal and state income tax credits and a property tax assessment freeze. I'll be telling you about each program a bit more later on. And as you should know, that if a property is income producing, a property owner could actually apply for all 3 programs for one project at the same time. All the tax incentive programs have requirements. In order to participate in the program, any of them, first, a property has to be listed or eligible for listing in the Georgia National Register of Historic Places, either individually or as a contributing building. Additionally, the project must meet certain financial requirements, such as spending enough in the rehab to be considered substantial. We need to be able to review the project thoroughly and hold the review up to guidelines called the Standards for Rehabilitation. So, when first seen by us, the application would be checked for both eligibility and proposed rehab plans. So, the first program I want to tell you about then is the federal tax credit. And even though this program is only for income-producing property, you should know that it was the granddaddy of our other programs. The Federal Income Tax Credit Program is the nation's most effective program to promote urban and rural revitalization and to encourage private investment in rehabbing historic buildings. This program is for income-producing properties only. Georgia is no small participant in the federal tax credit program. We've continually ranked in the top 15 nationwide in certified projects. In fiscal year 2010, we had almost $13 million in rehabilitation expenses. In a year with such a slow economy, that is remarkable. This hotel in Covington applied for the federal tax credit as well as the 2 state programs. And this is the hotel after rehab. The owner spent almost $1,300,000 on this hotel, creating office space. Data shows that for every dollar spent, $5 is leveraged in private investment in the community. A recent study from North Carolina found that for every dollar spent, $12.50 comes back into the community in the form of employee wages dispersed into the economy, increased state and local taxes from those workers, and the workers that are qualified to do historic rehab work are highly skilled craftsmen as opposed to unskilled labor. Here are some examples of successful federal tax projects in Rome and Augusta. The federal tax credit has generated over $50 billion in historic preservation activity nationally, and with over 37,000 approved projects across the country. The most successful historic rehab tax incentive in Georgia to date is the Preferential Property Tax Assessment. This program is a property tax assessment freeze that carries over for more than 8 years. This doesn't mean taxes aren't paid by the property owner, but that the assessment is frozen at the pre-rehab rate. This abatement continues with the property throughout changes of ownership. This is a home in Atlanta, a principal residence. It's a nice example of a project that took advantage of the property tax assessment freeze. An example of a rehab issue, please note that the porch on the before rehab photos consisted of a concrete front stoop with stock iron railings. The design of the replacement wraparound front porch and its columns, its railings, the roof, and proportions were based on historic examples in the neighborhood, but the fact that it previously existed was evident from the side door and the foundation. If the property is a residential rental, such as this duplex in Savannah, the owner would be able to take advantage of all 3 tax incentive programs. This project was spotlighted in our e-newsletter, Preservation Posts. The third program is the State Income Tax Credit, which originally was passed and became effective in 2004. In 2009, an amendment was made to that credit, and the changes are significant and enough to spur tremendous interest from developers of large-scale projects and private investors alike. The credit is 25% of your expenses spent to rehabilitate any certified historic structure. So for every dollar spent, a 25-cent credit is taken off the owner's state income tax. It's not a deduction, it is a credit. And again, that rehabilitation must be substantial. Unlike the federal tax credit, the state income tax credit is capped. This means for a personal residence, the owner could receive up to $100,000 as a credit. That means he'd have to do a $400,000 rehab. For an income-producing building like a commercial property or a residential rental, the cap is $300,000, meaning a $1,200,000 rehab. The credit can be carried over for 10 years. This is a wonderful rehab project in Savannah that took advantage of the state credit. Savannah, understandably, provides over 40% of our applications. Atlanta and Macon are also a large percentage of our applications. This is an income-producing property. Applicant took advantage of all 3 programs through our office. This is a project in Macon. It's a major rehabilitation effort. Took $2 million in expenses to complete the rehabilitation. It's also important to remember that these programs are not about a property's drive-by appearance. The interior is also reviewed to make sure that rehabilitation meets the guidelines for approval. These oft-mentioned standards for rehabilitation. Our review takes approximately 30 days, and the MPS takes an additional 30 days for a federal review. And fees are charged for both the state review and the MPS review. And please remember, our review does not affect any other review process. If your project is approved by the local preservation commission, it does not mean it is approved by us as well. You may have to meet many different review officials. You will also see the mention of a qualifying rehabilitation expense. We're often asked what that means. The tax code calls it an expenditure that can be properly chargeable to a capital account, or in other words, depreciable. For example, anything structural to the building, roof, walls, windows, HVAC systems. So landscaping, sidewalks, and driveways, and for the credit, enlargement costs, are not qualifying expenses. However, we do review them to make certain they don't affect the historic integrity of a property. Note, this expense information, by the way, is for all 3 programs. Some misconceptions about historic rehab come up continually. Some problematic areas include plaster repair. A general rule of thumb is historically finished spaces should remain finished. And I know the loft look is popular, and exposed brick walls are so easy to do when the plaster is falling off anyway. But this can be one of the fastest highways to denialville. Should the plaster be so deteriorated that it requires removal, the extent of that deterioration must be documented to us, physically or pictorially. But a general rule of thumb is walls and ceilings that were finished spaces historically should remain that way. So wholesale window replacement in this day of green awareness and energy conservation is always presented as an argument. And we know historic windows are very expensive to repair. But don't be fooled by the energy gurus who want to sell you new windows. The greatest source of energy loss is not old windows. Similar energy efficiency to double pane glass can be found by weather stripping and installing storm windows. There's just no substitute for how old windows contribute to the texture and the pattern of a historic facade. So with the changed income tax credit and the economy slowing down, it's hoped that tax incentives for historic rehab will act as a catalyst to revitalize the historic commercial core of communities, historic neighborhoods, expand the tax base, and generate commerce and tourism. And as you can see, we have more than 75,500 properties in Georgia eligible for tax incentive. We recommend calling our office before starting any rehabilitation effort to prevent problems and get technical assistance. Either our architectural technical reviewers, Bill Hover or Beth Gibson, or myself are there to help everyone work their way through this process. Thank you.